162.10. That is the staggering number flashing across our trading screens this morning. It represents an absolute 39-year high for USDJPY. So what does this historic breakout actually mean for all of us as investors? Let's get right into it. Hello everyone, welcome back to AI Market News. Today we're unpacking a massive shift in global markets. Based on available data, a major geopolitical de-escalation has sparked a broad risk rally, sending both equities and the dollar surging.
Section 1. The 162 yen milestone.
As we can see in the chart, USD/JPY decisively broke above the July 2024 high of 161.95 during ET trading hours, tapping 162.10. For those of us looking at the underlying mechanics, it's crucial to understand why this is happening. This move is fundamentally driven by the interest rate differential. That's simply the gap between higher US interest rates and lower Japanese rates. It's a dynamic that essentially makes holding US dollars much more attractive and rewarding than holding yen.
Section 2. Ceasefire sparks risk rally.
According to current market information, reports just emerged of a significant Middle East de-escalation. President Trump is reportedly set to meet with Iranian representatives in Doha, and alongside a pause in retaliatory strikes, we're seeing an agreement for free passage through the Strait of Hormuz. For newer investors wondering how this connects, geopolitical relief like this typically creates what's known as a risk-on environment. Basically, as global anxieties start to fade, investors confidently step back in to buy higher growth, riskier assets, like stocks.
Section 3. Equities surge across markets. Looking here, the graph shows the S&P 500 gaining 1.17%, while the Nasdaq jumped an impressive 2.07%. What's particularly interesting right now is the leadership driving this momentum. Large-cap tech names, specifically Alphabet and Tesla, were the absolute primary engines pulling the broader markets higher into the U.S. close in ET.
Now, this U.S. strength carried directly into Tokyo trading. Right at the open in JST, the Nikkei gapped higher. That simply means it started trading significantly above the previous day's close due to intense overnight demand. It absolutely soared, gaining roughly 750 points intraday. This massive advance was led heavily by semiconductor and AI-related names like Tokyo Electron.
Section 4. Bull versus bear cases.
So, the crucial point for all of us right now is comparing these two distinct scenarios. The bull case for the dollar rests heavily on that intact rate differential we just discussed. If upcoming U.S. economic data proves strong, expectations for a September Fed rate hike will really firm up, making a target of 163 very realistic. Conversely, the bear case is built on escalating government intervention risk at these extreme levels, combined with a massive buildup of speculative short positions against the yen.
Which brings us to a vital market mechanism we need to understand: position unwinding. This happens when investors rapidly close out their existing trades, often causing sharp, exaggerated market movements in the exact opposite direction. Because speculative net short yen positions have built up so significantly, a weak U.S. jobs report could easily trigger massive, sudden dollar selling as traders essentially rush for the exits all at once.
Section 5. The economic calendar ahead.
Looking closely at the timeline, the undisputed focal point for all of us is Thursday's crucial U.S. June jobs report, commonly known as NFP. That's released at 8:30 a.m. ET. The prior reading sits at 172,000 jobs added. Following that, Friday brings a U.S. Independence Day substitute holiday. Because of this, keeping our position sizing strict and manageable is absolutely critical ahead of both the data release and the long holiday weekend.
Thanks for watching. Please subscribe and hit the like button. This video was automatically generated by NotebookLM AI. AI-generated content may include errors. This video does not constitute investment advice. For full details, please check the description below.